What is happening, investors? It is your boy Jack. I'm not a financial advisor. It is too warm right now to wear that hoodie. It is beautiful outside. And today I have to speak about the 9 stocks that I went ahead and picked up this week. I didn't buy any stocks last week, so I had to get something this week. And I ended up getting more than I planned to, but I'm happy with all of the choices I've made. But going forward into next week, the week after, the next couple of months, my main focus is going to be on growth stocks. That's what I'm looking into now. I am going to keep, slowly but surely adding into my dividend picks, but I want some new juicy growth stocks, baby. And I just have to say, guys, in response to yesterday's video, my days, the support on that was incredible. If you didn't watch it, it was basically a top 10 stocks to watch in June type video. And I make those videos every week, and I was worried in case I was overdoing them, but you guys very quickly reassured me that you want to see them every week. I mean, there was comment after comment after comment saying to keep it a weekly series. So those videos will definitely stay a staple on the channel, okay? I'm always going to upload one talking about what stocks I'm going to be watching next week, because you guys seem to enjoy them. And guys, as of recording this, we're literally on 4,820 subscribers. That is absolutely mental. 5,000 is only around the corner. We're probably going to get it early next week. This is so exciting to me. I appreciate you all so much. If you're not subbed yet, hit that juicy red button. Remember, when we hit 5k subs, my full stock portfolio reveal video is coming, and I'm so excited to share that with you guys. Also, please make sure to drop the video a like. It helps me out so much. Drop me a comment, let me know what stocks you bought this week, or if you agree or disagree with any of the stocks that I bought this week. And with all of that being said, let's get straight into it. Let's do what we do best around here and chat about some stocks, baby. So the very first company we have today is Pembina Pipeline Corp, okay? And keep in mind, I only go through every company very briefly, or else the video would be very long. And last week, I bought stocks on Monday and on Friday. And I actually bought these guys on both days. So this was the first time I ever picked up these, a brand new addition to the portfolio. And I ended up, across the span of the week, picking up 6 shares at an average price of $25.33. So these are a Canadian company, so keep that in mind. These prices are in Canadian dollars, not US dollars like you're used to seeing. On the 6-month chart, right, we've dropped down 68% from highs to lows, and they're still down 35%, which does represent a very nice recovery of over 100%. Dividend yield 7.19%, so a massive dividend, and a company that's been hit very harshly. Dividend safety of 80 and a dividend streak of 23 years. So I want to have a look at the max stock chart, okay, and we can see that in general this stock goes up and up and up, you know what I mean? They see some really nice growth. Now here, 2014 to 2016, there was this steep crash, okay? And what was actually going on in the world, there was pipeline politics going on in Canada and the 2014 to 2016 energy crash. So that is why we saw this massive crash, okay? But since they started recovering, again, we just saw an awful lot of upward growth. And before we got to where we are now with this crash happening, we saw close to 100% growth in a span of a few years. It's quite nice, especially when it's a company who has that 7.2% dividend yield. I mean, generally, you like to see a company give you 10 to 15% a year, even if the dividend's only 3 or 4%. So these guys have returned a lot more, a considerable amount more than that, and they have that massive dividend. So they've performed very well since they last got hit. And do just keep in mind that this here was the only time that they ever really saw a big dip, and their recovery was fantastic once things started coming back up. And now what we see is, again, that massive dip. The recovery may be starting, it may have a little bit lower to go, who knows? But I just think that once the recovery happens, we're going to have a nice few years of steady growth in a company like this. But me, I just wanted to get into more of these midstream service providers who are in the world of oil. So it makes sense to me. It may not make sense to you. I actually am in one other company similar to these, and we're actually going to speak about them later in the video. But yeah, that's the first company. I'll leave them there. Again, we keep things very short. Exxon Mobil, baby. You all know exactly who these guys are. You know what they do. And you know they have that 7.65% dividend. So again, a massive dividend. I just went ahead and picked up 1 share in these guys. Nothing substantial, nothing crazy. But it's a dividend company to me. With these dividend companies, you want to just keep slowly but surely adding to your position. I will be making a full video on Exxon some stage next week. I'm also going to be making one on Altria and AT&T. They're like 3 massive high-paying dividend companies that I get questions about an awful lot. So I'm going to make full videos on those 3 companies. So if you want them, just make sure you're subscribed. They have that 37+ year uninterrupted dividend streak. And despite everything that's happening in the world right now, the dividend appears to be somewhat safe. It's not the safest in the world, but I don't think personally it's going to get cut. We have a look at the 6-month stock chart. From highs to lows, they were down 55%, still down about 35%, so still a lot of room to recover. And then the last thing I want to do is just have a really quick look at their balance sheet. Current assets, 50.24 billion, okay? I could tell you this balance sheet off by heart, I've seen it this many times. Total assets, 355 billion. Now, the current liabilities are 64.7 billion, so not ideal when our current assets are only 50 billion, But again, a company like this, they're going to get through it, you know what I mean? Especially when we see that their total liabilities are only 167 billion. Our total assets are 355.8 billion. So, not the best in the world, you know, it's not one that you look at and your jaw drops, but it's fine. Not too much needs to be explained though. They're just, in my eyes, a dividend stock that also has the potential to pay back an awful lot considering how heavily they've been hit as of late. Okay, so that's number 2, Exxon. Oh baby, we are having a look at Facebook, okay? And I went ahead and I picked up one full share in Facebook, okay? So this was by far my biggest investment this week, but I love these guys so much. You guys all know that Delta is my favourite. Well, Facebook and Delta are neck and neck right now. I absolutely love the look of these guys and I want to keep buying them as much as I can. I do have a full video just speaking about Facebook and why I love them so much. So if you want a 15-minute breakdown, go watch that. But I'll just give you some quick fire points right now. Their balance sheet, okay? 69.3 billion current assets, 138 billion total assets, only 15 billion current liabilities, and only 33 billion long-term liabilities. So total liabilities, sorry. So they have so much money. These guys can do whatever they want. If they want to go buy an up-and-coming company, they can do that. If these guys want to launch more products, more services, they can do that. They have the means to do just about anything in the world right now. They own Instagram. They purchased them for $1 billion back in April 9, 2012. It's now worth over 100 billion, okay? WhatsApp. They purchased this for 19 billion. WhatsApp currently has over 1.5 billion users and it's not monetized yet, so that's a place where they can go make a whole lot of money. Facebook expects half of employees to work remotely over the next 5 to 10 years. They're going to be letting people work from home, something that's not really been done before, and something that a lot more companies are more than likely going to do as well when this whole situation is over, when the virus is completely gone off the face of the earth. The world is going to change, it very much so is, and I think Facebook acknowledged that very quickly and they've taken action and they're going to try to take advantage of this really bad situation. They have services with billions and billions of monthly, weekly active users, whatever it is, okay? They're one of the biggest advertising platforms in the entire world. They have so much more room to make money and they have so much money to go buy more companies. To me, Facebook is just the biggest no-brainer out there, and that's why it very quickly has pretty much become my favourite company. Another company who needs absolutely no introduction whatsoever, and my second biggest investment this week, was into Apple, and I picked up 0.4 of a share, which brought me up to a total of 1 share in the company. So they are a $317 stock. I'm not going to be picking up multiple shares every week, but I'm happy I do now own 1 full share. So again, what is there to be said about Apple? You all know exactly who they are. They're a growth stock. They're one of the fangs. They're like a Facebook, okay? From highs to lows, they only dropped 31%, and they're right back up to only down 2%. Funnily enough, they do pay a dividend, so be it. It is only 1.03%, but you know what? It's an extra 1.03%. Another company with some really nice growth. So in the last 5 years, you know, you would have seen pretty much 150% return on your investment, which is very juicy. If you would have bought these guys back in 2010, 10 years ago, you'd be up over 1,000%. So there's a lot of potential with these guys. And I've said it in videos before, I love Apple. I'm recording this on a Mac right now. I have my iPhone 8 right here. An absolute monster. A serious monster of a balance sheet, okay? Current assets, 143.75 billion. Total assets, 320 billion. Current liabilities at 96 billion and total liabilities at 241 billion. So, in a very good position, both short and long term. One thing of note, okay, their forward PE ratio is 24.1, which in general is really high, but for a FANG stock, it's actually low, okay? It is well above its 5-year average of 14.9, okay? So it looks pricey compared to how the market has valued it in recent years. But I think a PE ratio of 24.1 for a company like Apple is very fair. Facebook has a PE ratio of 32.39. Alphabet has a PE ratio of 29.29. Amazon has a PE ratio of 116. Netflix has a PE ratio of 84.98. You get the picture. In the grand scheme of things, in relation to these FANG stocks, Apple's PE ratio is actually quite low. Now, I understand they're obviously their own company. You can't compare them to these guys, but it is an interesting point that I do, you know, it makes me feel like I'm getting in at a decent price. Essentially, just another growth stock that I want to keep buying on a weekly, every 2 weeks basis. So next up we have Amazon, and I only went ahead and picked up 0.03 of a share, which equates to, I don't know, $70 to $75, something like that. Amazon, before we even look at any of the numbers or anything like that, let's just think about them, think about what they do, and think about the fact that the world is moving online, in my opinion at least. This has become a very frequently brought up topic on the channel as of late, but my belief is that the world is moving online, simply put, and Amazon are the absolute leaders. You know, this mic I'm using right now, you see this mic, you can't see it because I strategically put it just above the screen. I went ahead and I bought that from Amazon. You can go to Amazon and get anything delivered to you. It does not matter what it is, you will find it. You don't have to go to a shop who may or may not have what you're looking for. You can go to one place online, find exactly what you want, and find it for the best price humanly possible. It just makes so much sense as far as how a business should be run goes. And another company with a nice balance sheet, okay, current assets nearly 86 billion, total assets 221 billion, current liabilities 79 billion, and total liabilities 155 billion. So just massive balance sheet, okay? I know the current assets to current liabilities isn't the best in the whole wide world, but it doesn't need to be. These guys are absolutely fine. They're not going anywhere. They're owned by Jeff Bezos, right? The richest man in the universe. I'm going to leave them there. There's nothing really needs to be said about them. They're just Amazon. One day I'll own a share in these guys. Just wait. Right now, let me check what we're at in regards to Amazon. 0.11 of a share. You know, I'm 11% of the way there, guys. Okay, we 4 more companies, and now we have to fast forward to Friday. Now, on Friday, I just put €200 into the account, so about $220-ish right now. So it was a little investment, and I picked up 4 companies, so you can imagine about $55 a company. Nothing major, but you know yourself, these small purchases really do add up. So first up, we have a company called Enterprise Product Partners, or EPD is the ticker symbol, and I bought 3 shares in these guys. So another massive dividend, a 9.32% dividend, okay, a 65 dividend safety, and an uninterrupted dividend streak of 21 years. So they're one of North America's largest midstream MLPs, with about 50,000 miles of natural gas, natural liquids, crude oil, refined products, and petrochemical pipelines. So another midstream company similar to Pembina Pipelines. The reason I like the look of these companies is because they got hit particularly hard because of the situation, okay? They went down about 57% from recent highs to recent lows, and right now they're still down about 34%. You want to know something horrible? I ended up buying them, I believe it was literally somewhere around here. I got them at a terrible price. Oh, I actually just went through all of my order history, and they were actually the second company I ever bought. That is very interesting. But I'll throw the proof on the screen now. The first time I bought them, they were at $24.50. So literally, it was up here somewhere. Oh my goodness. So I have managed the dollar cost average down to an extent. I am still down about 10% with these guys, but it could have been 21.5%. So we've done a decent job of getting the cost basis down. Now it's a decent balance sheet, okay? Current assets 7.7 billion. Total assets 62.26 billion. Current liabilities 6.9 billion, so slightly below their current assets. And then total liabilities 36.15 billion, so very, very far below their total assets. So all in all, this company is in a decent position. They should be able to maintain that very, very nice dividend. They should be able to, you know, when things start going good again, making a lot of money and getting our share prices to be worth more money. So I will admit that these definitely aren't the kind of company or even the kind of sector that's for everybody. And that's totally understandable. I see they're not the safest company in the whole wide world. A lot of people won't find them attractive, and that is completely fine by me. I just happen to like these midstream oil related stocks, okay? And as well, let's keep in mind that they do pay out that 9.32% dividend, which is an absolutely massive dividend. But we shall leave them there. On to our next company. Oh, okay. Wells Fargo. I actually did on Friday pick up 2 shares in these guys, okay? Now, let's talk about these guys. My worst performing stock by a long mile. I am going to make a full video on bank stocks and things along those lines because I think it needs to be addressed. But why did I go ahead and buy them? At the end of the day, I believe personally that a long-term investor looking at any bank stock, be it Wells Fargo, JP Morgan, whatever it is, through investing in that company, you're investing in America if you're doing it for the long term. And when times get economically tough, the banks get hit the hardest and the fastest, and they can take the longest to recover. So in the Great Recession, Wells Fargo lost, you know, maybe 60-ish% of their value, okay? And the recovery was absolutely fantastic on the other end, okay? Look, in a matter of 5-6 years, 300, 400+% returns. Then we had a shaky 5 years, you know, not really much has happened. What's going on? Oops. Back to here, we had a shaky 5 years where it was down and it was up. It was very much so trading sideways. And now we've seen the massive crash. This is a company that is still down 50%. So I must admit, I am somewhat nervous investing in these guys right now. And I fully understand that in the short term, things may get even uglier. I may lose even more money in these guys. But I also believe, I well and truly believe that in the long term, these guys will pay me back an awful lot of money. You can always be wrong in this game. I could just be a loser with these guys forever. I definitely don't expect you to agree with me, but But yeah, that's why I picked up 2 shares in these guys. I will make a full video on bank stocks very soon. I have so many videos I need to make. That video will come soon. Okay, we've 2 more. You know exactly who they are, so I'm just going to do it really quickly. Altria, okay? Literally bought 1 share for $38.44. It's just another dividend company. When you've some money left over at the end of the week, nothing wrong with just throwing it into a little high dividend player like Altria. 8.6% yield, 55 dividend safety, and wait for it, 50-year dividend growth streak. I mean, guys, for a dividend king to pay an 8.6% dividend yield, woo, that's nuts. Again, I said I'm going to make a full video on these guys next week. So a few quick points, okay? They're in Kronos Group, an emerging global cannabinoid company. They're in ABNBev. They have Juul, you know, they're the leading e-vapor brand. They're in nicotine patches. They sell their cigarettes, obviously they sell wine. They're in a lot of emerging markets. They have a really, really good history with their stock. I am speaking really good. Now the last couple of years have been poor. The last few years have been poor. But to me, it just means I'm going to get in at a better price, baby. These guys are getting into so many emerging markets. It's so exciting to me. I genuinely love the look of these guys. It's a dividend, right? It's a dividend stock that pays, where were we? It was 8.6%. That I also see having the potential to be a growth stock. So that's an absolute win-win for me. Now again, who knows when they're going to start going back up in price? It could be a while. They could just keep going down for a while. Who is to say really at the end of the day? We're going to have to wait and see. But anyway, that was Altria. Just picked up 1 share. And then the next one is even less exciting. We have Southwest Airlines, who again I just picked up 1 share in that cost me about $32. Why Southwest? I have a lot of money in Delta. I just wanted to get a little bit extra in Southwest. I currently own 7 shares in them and they've done very well for me. But you will see all of that information when we hit 5,000 subs and I get to upload my stock portfolio. I've spoken about these guys loads of times in the past. I literally just bought 1 share. I had a little bit of money left over and I said, alright, you guys can have it. So they are the 9 stocks that I went ahead and bought this week, guys. Now, going forward into the next week or two, things are probably going to be a little bit different. Now, who knows? My mind is forever changing. It's always running the numbers. But I am hoping to get into some new growth stocks. I've kind of reevaluated my portfolio. I've reevaluated where I am in life. And I'm kind of thinking to myself, I have a lot of time to buy these high-paying dividend stocks, you know? For the majority of my life, I hope to make more money than I'm making now. Just at the end of the day, with the amount of money that I'm putting into the market, yeah, the dividends are nice, don't get me wrong. I still am going to invest in dividend stocks. I just think my money is going to be best spent for the next little while in these growth stocks. So instead of putting maybe 70% of my money into my dividends and 30% into the growth stocks, I might just switch that around. Or maybe it'll be a 50-50. Who knows? It's always changing with me. I just go where the deals are, baby. That's where I go. If you watched till the end, thank you so much. It genuinely means so much to me. I find it absolutely insane that we are nearly at 5,000 subscribers, guys. I know if you're watching till the end, you're probably one of the people who's been here for a little while. The last month and a half, 2 months, when things really started picking up. I appreciate you so much. Like, I genuinely do. It's nuts. You motivate me every single day to get up, speak to this camera, do the research, edit the videos. I genuinely look forward to it every day. So thank you all so much for watching until the end. I really hope that you did enjoy the video. If you did, please smash the like and drop me a comment just letting me know that. It genuinely, those kind of comments brighten my day. I will catch you all for tomorrow's video. Have a good one, guys. Peace.